Let's go in 3, 2, 1.
Hello, Warriors. Let's have a great week. You know, there's an expression. If you get the dollar right, the direction of the dollar, you get everything right. Because market participants have seen it's all one market. Things vary in degrees and magnitudes, but when the dollar is going down, it's supportive of risk. And when the dollar is heading up, it is usually because of some type of risk off and puts pressure on commodities as well. So here we have the dollar. I know that you guys are probably getting tired about hearing this, but the picture hasn't changed. For one more capitulation decline under par, which I've been talking about for weeks now. And perhaps we get it this week. Maybe it's a CPI, a good CPI number that takes the dollar down. I'm looking at about 99.5 in this range, but a bit of a panic under the big round number. And then I'll be looking for reversals. So what does this mean? This means that anything that's been going up, risk on, still could have, this window of time to give us a rally. That includes something like gold, which may have topped last week, but on one final dollar decline, this wick right here was done in Asia. Most platforms don't show it, but perhaps the gold can challenge the highs again. It doesn't look great to me. 1920 looks like a magnet. So with the dollar declining one more time, I think it sets up shorting opportunities in gold and silver. I'm not sure what the targets are going to be. There's some people talking 26.5 in the silver. Euro, I'm thinking 112 I've been talking about for a while. Still think that that's viable on that move in the dollar to 99.50, 127.5, viable for cable. I think that Aussie, which has really been outperforming, if you look at Euro Aussie, 69.20 is the level I have for this phase of the rally terminating. So, we're going to break out right here over these double tops. I'm thinking right around 69.20, 61.8 back could be a short in that as well. Euro pound at major support, it's not a trade for me, but basically anything that is risk has a chance to rally, and that includes the S&Ps. I thought we were going to have a reversal week to the downside. Maybe we challenge these highs and take them out. People are going to be calling 4,200 a breakout, and there are some people looking to short it up here at 43. One thing I could say for today is, although the S&Ps are up and they're buying the banks that have been obliterated, with S&Ps up 5 or almost 6, you have NASDAQ down about 18. So as NASDAQ led the way up after the dollar bottoms, I expect NASDAQ to lead the way down. You guys know I was bearish Apple, still in puts, and we had this earnings blowout. It really wasn't like Microsoft or anything, but it's going to come in, looks like, I don't know, 70 cents lower. It's a throwover, and I want to remind you what throwovers are by showing what happened in the wheat, where people were, definitely in desperation on the throwover. This too was a throwover that lasted a few days, but now wheat's back inside of the wedge, and it had a reversal week to the upside. It looks good. For Apple, back under 170 is going to be a problem, because that would mean the end of the throwover in Apple, and Apple's been one of the strongest issues in the market. So just like wheat, we have a throwover, only this one's to the upside. Closes back under this 170 level, gets it back inside the formation. It is a rising wedge, so there's some pretty good downside. If it's going to make hay, it's got to do it now with this last decline. One of the exceptions for a big rally, I think, and I've been talking about it since the highs, has been Bitcoin. and Bitcoin is coming back quite a bit from the news of Binance not having trouble with getting Bitcoins and cash and deposits back, kind of taking the shape of a head and shoulders top. So back under 25, maybe we're going to be looking at 22 or lower. So once the dollar bottoms, it's going to be very interesting to see what could rally in the face of that headwind. Because once we do have this dollar bottom to complete down here, the potential for a bear market rally could take us back up here to 105 and maybe even higher. And I think that's going to be because of risk off. I'm not sure if it's Europe or it's going to be the banking problems that continue to come to the forefront, even though people are specking there's actually an island bottom in some of these regionals. They're gapping up today. So anyway, that's a big thing. Macro event is going to be a dollar bottom and completing this whole wave down. This is just wave one down that's going to complete. And then we'll get a wave two rally and then the serious dollar decline later on. So good hunting, and invite you to join us here in TradeGATEHub. Invite you to try a demo of TradeView. Check out their spreads. Mike will be with you in a little over 90 minutes, and I'll be back with Mike tomorrow. Good hunting. Don't just count your pips, count your blessings, and prepare yourself for a low in the dollar under par, around 99.5. And that could be a time where everything is going to be under pressure for a while. Adios.